Welcome to Cash Chats with me, Andy Webb from BeCleverWithYourCash.com. This is the podcast to help you make the most of your money. In episode 347, I'll be looking at the latest rate of inflation. It fell last week to a low of 4.6%. What does that actually mean for your spending and your savings? Next, with Black Friday coming up this week, I want to share some extra hacks, some things I like to do to get an extra discount, an additional discount on any bargain prices that you might be able to find. Plus, if you are wanting to take advantage of a bank switching deal and you need a direct debit and you do not have a direct debit already set up, don't worry, I will share with you some fast and cheap ones that you can set up in your accounts to hopefully mean you won't miss out on that free cash. All of that plus my deals of the week. Let's waste no more time. It's episode 347 of Cash Chats. So to start off, let's talk about inflation. The most recent rate was announced last week, and I'm sure most of you know this, but for those who don't, inflation essentially is, the inflation rate at least, is the average price of a basket of goods. And some of these things are not tangible things you would put in a basket, things which we'll come back to in a moment, like energy prices. Basket of goods, the average price of everything in there, with some things weighted more heavily than others to try and give a more proportional rate, how much they have increased compared to that same basket 12 months previously. That rate, if it is an increase, is an inflation rate. How much more expensive those things were compared to a year ago. And the most recent one we have for October, because it's always kind of a month in arrears, a few weeks in arrears, brings that inflation rate, the annual increase rate, 4.6%, which is, as all the headlines would say, good news. Because the month before that, 6.7%. The month before that, 6.7%. Before that, 8, 9, 10, 11. We were in double digits, earlier in the year, later last year. So to have inflation falling is a good thing because it means that things are getting more expensive at a slower rate. But that's a really, really important thing there. More expensive at a slower rate, because I know sometimes people do get confused about this. So it's really worth just talking about this again. Inflation means prices are increasing. That is why you have not seen prices drop. It's just the pace at which they're increasing has fallen. Things are still more expensive. And also remember that basket of goods, it's an average rate. Yes, things are weighted more heavily than others, depending on how much we spend on them or how important they are. But yeah, there'll be a variation within that. And there are a couple of important things to sort of stress here as well. Something which we all see every day, spend money on every day at the supermarket and eating out is food. And food inflation is currently at 10.1%. Now that is lower than it was the previous month. And we have some really, really, really high inflation rates, particularly in certain foods over the last couple of years. But again, it shows you that some things are still going to be higher than that 4.6% increase. So something's still more expensive, getting more expensive month on month, again, by higher amounts. And the other thing, I mentioned energy prices were in that basket. Well, that was also a little bit of a kind of maybe a misleading sense of just how much price increases have changed month on month. Because if you go back a year, October 2022, as well as all the crazy things that have been going on there with the Liz Truss government and their financial decisions, we also had the energy price cap go up to an incredibly high level. So high, in fact, that 2 measures were put in place to try and make it more affordable for households. It was still really expensive, but slightly more affordable. We had that energy price guarantee, which meant that the government subsidized anything above that, between that and the price cap. So we paid that level, not that level. And then we had the £400 kind of payment knocked off every energy bill from 6 months starting October, £67 off every single month until March of this year. That was a massive price. The energy price cap has fallen massively since then. And that is reflected in the inflation basket dropping. The big part of that dropping from where it was prices a year ago to now is that change in the energy price cap. But we're still paying roughly the same as we were a year ago. Still very, very, very high energy bills. But this time we don't have those extra things to bring the price down. So again, a little bit cheeky, maybe a little bit misleading in the sense of, that's how they measure it. It's not misleading in that sense, but certainly in the spin on it, in terms of thinking, hey, great, this is good. Things are getting better for us. We are still spending more money. Things are still more expensive month on month. And some things haven't really changed much. But that's roughly what's happened with inflation. But this kind of fall was slightly larger than expected, not by much. I think they were saying 4.7, 4.8% is what people anticipated, 4.6. But it does sort of show that those predictions from the Bank of England just a few weeks ago, when they kept the base rate at 5.25%, that looks like it's happening. And if that continues, their path continues or anything, it might happen a little bit faster, it might be accelerated, then it could well mean that we have seen the peak in the base rate of interest. We'll not see any more increases, which is kind of where we were thinking about a couple of weeks ago when I shared with you exactly what was going on there, just episode 345 2 weeks ago. That's kind of what we were anticipating base rates to stay where they are for a longer period. I think that's still going to be the case, but maybe now any drops we have in the base rate will happen sooner. Maybe we'll have a drop in the middle of next year, another one at the end of next year, small ones. But again, these things might happen sooner. So that's certainly something to think about. And that in itself will have knock-on effects on our savings and our borrowing as well. So mortgages, again, we've already seen rates falling off the back of things before this inflation announcement, but even more so now, it could well be that we get better rates, not those amazing rates that we had a couple of years ago, but still better rates for people. So again, if you are coming to the end of a mortgage deal, it really is worth talking to a mortgage advisor, a mortgage broker, to get a sense of the best deals on the market and the ones that might have the best flexibility for you. But also when it comes to savings, well, if we've seen maybe the peak in the base rate, then I think we've almost certainly seen the peak in those savings rates, particularly the fixes. And I told you about this a few months ago. I said I think the peak was here. A few different accounts have been around, kind of maybe keeping things up a little bit more for a while. They've disappeared, and I have seen it every day. Myself and the team, we're updating our savings best buy tables at becleverwithyourcash.com/savings at least twice a day. And each time we do this, rather than adding in loads of new accounts at the top, we are taking away the top picks. They are going all the time, every day. New ones are gone. So if you are going to be wanting to lock your money away, probably missed the peak already. I can't imagine things will be coming back again. You never know, but I can't imagine things will come back again. And I think, that's going to carry on dropping at this pretty fast pace where providers disappear. So it's a good opportunity for you to, if you haven't already, to maybe lock some of that money away. Just remember, you won't be able to access it if you do lock it away. And also, if it is a longer fix than 1 year, the interest, generally, not always, but generally the interest is all accumulated when that savings account matures. That means if it's a 2-year fix, if it matures, the interest matures at the end of those 2 years, then all that interest comes in there, and that could have an impact on your personal savings allowance. So bear that in mind as well. Of course, the flip side of this for savings is that with the inflation rate of 4.6%, there are now dozens and dozens and dozens of accounts, pretty much all-time variety, which beat inflation. For the first time in such a long time, you can beat inflation on your savings rates. And again, head over to becleverwithyourcash.com/savings to find out what those best ones are. Easy access, regular savers, fixed accounts, ISAs, notice accounts, you name it. The top ones are all listed on that page. Okay, next up, Black Friday is this week, but the stuff I'm going to share with you right now will work for you all year around. But I'll tell you about it now because, as we know, there is going to be a lot of people spending a lot of money this week and over the weeks as we run up to Christmas. It's a good time to tell you, but again, it is stuff which you can do all year round. And this is about how to earn extra money on your purchases, ideally on top of those deals and discounts you find. But even if something is full price, there's no ways to save. These are maybe some ways for you to get something off that, pay a little bit less. And it's cashback. Nothing new. I'm sure you all know about it. I've spoken about it so many times here on the podcast and on my other channels. But there are a few ways of doing this, including a newer way to do it. So I'll talk about those first of all, and then I've got a couple of other kind of little spending hacks which might save you some cash as well. So cashback. I spoke last week about welcome bonuses on cashback credit cards because you might want to have some time to apply for those, to get them in the post so you can start spending them in the sales. I told you about them last week. But there are some other ways you can get cashback which are really worth considering. One of them, I'm sure you know about, are those cashback sites like Quidco and Top Cashback. You click onto those sites, search for your retailer, and then click through to that retailer and shop as normal. And it could be anything from 1% to 10% to a set amount of money, whatever it might be. And they are great ways to earn a little bit extra. I won't go into full of detail on those in this episode, but things to be aware of there. One, the cashback is never guaranteed. So don't buy something on the basis of the cashback. You've got to be something a price you're happy with and something you can afford to buy, just in case the cashback doesn't track. Tracks most of the time, but sometimes it doesn't. And secondly, if you have a voucher code, that might be better to use that than a cashback site, because you are guaranteed that discount at the till there and then. You know exactly what you're paying. And if it is higher, always go for that, obviously. But if it's the same or even a little bit lower, you might want to in caution and use that voucher code. In an ideal world, you'll use them both, and you'll get both the discount from the voucher code and the discount from the cashback site on your purchase. But often that won't work unless that voucher code itself is listed on the cashback site. And the main two cashback sites really are Quidco and Top Cashback. If you have never used them before, and I will list these in the show notes, there are a couple of really high-paying welcome bonuses you can get for the first time you use them. £17 for Quidco, that's only available via my newsletter if you sign up to that, but also temporarily, just for Black Friday, there is £20 from Top Cashback. So that's all over on the website, and I will link to it in the show notes. becleverwithyourcash.com/cashchats347. You know about these ones, okay? You know about those cashback sites. There are some newer ones, though. This is what I kind of want to focus on here. And these are ones which work slightly differently, because they will give you cashback on gift cards. Now, you might be thinking, well, that's great if I want to buy someone a present for a gift card. But what use is that to me otherwise? Well, this is a good use, because you can obviously use a gift card yourself. You can use them to buy the things that you want to buy. And with these cashback on gift cards, it means you're going to save a little bit of money. Now, it does obviously depend on the retailer. Not all retailers are listed on these different brands. I'll take you through the top ones in a moment. And some of them will give you a smaller amount than others. But, you could certainly be getting, 2-3% on supermarket shopping, let alone Black Friday, just supermarket shopping, by buying your Tesco, Asda, Sainsbury's, Morrison, Waitrose gift cards, whatever it is, via one of these sites. So that's a great way to save on your everyday spending every time. But you might also be able to get more on normal shops, but eating out, all these kind of things. There are loads of different options out there. Really, really worth having a look at them. And the main places to do this are Hyperjar. You might have heard of Hyperjar as a budgeting app, and it still is a budgeting app, but it's introduced this new feature just in the last few weeks where you can buy gift cards and get cash back. So that's a good one to look at. It's probably my favorite one out of these newer ones. Also, Jam Donut. Jam Donut has the largest selection of gift cards you can buy and get your cash back on. There's also, again, list that on the site as well. We've got a £4 welcome bonus if you're new to that one. So that's a nice way to get a little bit extra first time you use it and make a purchase. There's one called Cheddar, which is okay. Doesn't have as many retailers on there, but it's certainly worth having a look at. And there's also Top Gift Cards. This one's been around for a long time. It's part of Top Cashback, but that one is also worth a look. And they all work the same way. You buy a gift card and then you get cash back paid to your account once you have bought it at those different rates. Now, there are some things to be aware of. It sounds great, doesn't it? There are some things you have to be aware of as well. First of all, as with any gift card, there are risks. If you lose it, now these are digital ones, so they're harder to lose, which is not necessarily a bad thing. If you do lose it, as long as no one else, if you've printed it and no one else uses it, you can always get it again. But most of the time they are stored on your phone in the app that you've bought them on. So that's harder to lose them, which is thumbs up. That's great. But if the retailer was to go bust, then that could be that gift card is worthless, is not protected. Your money is not backed up the same way. If it was a savings account with financial services compensation scheme protection, it will be fine. If the bank went bust, if it's a gift card, it's all going to go. And that's why potentially it's not wise to put a lot of money, to have loads of these gift cards all at once. It's better to do them as and when you need them and use them quite quickly. Another problem you might have with these gift cards is that if you buy something that you don't want for whatever reason, and you take it back, it doesn't impact your statutory rights, right? You still, as long as that retailer will give you a refund, and it does depend if you buy it online or in store, quite what your rights are there. But broadly speaking, as long as you're allowed to take it back, the refund will be back onto a gift card. If not the same gift card, then a gift card from that same brand. And if you shop somewhere regularly at these places, that's no bad thing. Again, your Tesco's, your Asda's, whoever it might be, if you go to them on a regular basis, having a gift card spend is not going to be a problem. But what if it's a single item that you buy very, 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 very rarely, or a retailer you go to just because of that one product? You're then stuck with this gift card, which means you're then going to have to go and spend money at that shop again at some point. It might even expire the money, so you might have a deadline before that gift card has to be used. And that's no good, is it? You're not saving yourself if you're buying something for the sake of it. Or likewise, it might mean you miss out on shopping around for that best price at a different retailer because, again, you're restricted to that particular gift card. So what I would always do with these is never use them for something unless I'm 100% sure I'm going to keep it. And that would also plays into some the big purchases. I would be very, very wary of those as well. So yes, let's say there's Currys, and let's say you can get, I'm not sure what the current rate is, but let's say you can get 4% back at Currys on one of these gift cards, and you want to buy a £1,000 telly, right? Which is a lot of money for a telly, but they do cost that much sometimes. £40 off is lovely, right? That's a really good thing to have. But if for some reason that TV doesn't work out and you return it to them and you don't want to buy another TV or anything else from Currys, you are suddenly stuck with a £1,000 gift card for Currys. So be really, really careful of that. I generally, if I do this, it is only, as I say, for everyday spending at things like supermarkets or the likes of Boots or places that I know that I'm going to shop at on a regular basis, or for smaller amounts that it's not going to be too much of a problem. But I do, if I'm unsure of anything like clothes where you want different sizes, whatever, I won't use them at all. But they are a great way to get that a little bit extra. The last thing to say about these though is that there is often a minimum payout in cashback. Now, this is specifically around jam donut and cheddar. With jam donut, you need to earn £10. With cheddar, you need to earn £5 before you can claim that money back. Now, if you use them a lot, that might not take too long in order to get that pot moved up, but it is something to bear in mind. Top gift cards and Hyperjar, you can get that money whenever you want. As soon as you earn it, it's yours to spend and withdraw. These aren't the only hacks I want to quickly share with you. Some other ways that you can maybe save a little bit extra, and this is particularly good around now, around the sort of Christmas purchasing and Black Friday, but you could again do it all year round with many retailers. And this is the twins of price matching and price drops. Now, you know what price matching is. Sadly, John Lewis stopped doing it in 2022. They're never knowingly undersold, but there are other retailers that will do this, that will give you the ability to get a lower price because you spotted it elsewhere. Now, why would you do this, right? Why can't you just go and buy it at the other retailer at a lower price? Why would you price match it? Well, a couple of things. This is about other savings you might get as a result. So maybe you'll get free delivery. Maybe you'll get slightly enhanced warranties, particularly when we talk about technology, things like that. But then maybe you'll also get price matching after you've bought something. So it's not just before you buy it, but some retailers will price match after you have bought something. So if a price was then to fall subsequently at a different retailers, you can get some money back as well. Again, not many places do this, but it's certainly worth keeping an eye out for it. But there's also places which might do this if they reduce the price as well. And I did say that John Lewis stopped their price matching, but they do have something which not many people know about, which is their price drop promise. If within 35 days of you buying something at John Lewis, they reduce the price, you can put in a claim and you can get that difference refunded to you. So it's a good reason to look at shops that might do this and see if, when you're browsing different retailers, if they have that, it is certainly worth, and the price is the same. Price matching or price promises, they can be great ways for you to get that little bit extra back. The last section this week, before we get onto the deals of the week, is to talk about direct debits that you can use for bank switching. Now, not all bank switching deals require direct debits. I would say maybe half of them have this as a part of the eligibility for you to get that free cash when you switch. At the time of recording this, Barclays, Nationwide and Co-op's Refer a Friend bank switching offer, they do all require you to have a direct debit. But the First Direct one that's running right now, that doesn't. The Lloyds one that's just finished, that doesn't. And I'm sure as others come and go, they also will or they won't. You have to look at the details of those offers to find out. And I do share that information on becleverwithyourcash.com and on the YouTube channel and here on the podcast when the offers come along. So you should always know exactly what you need. What I'm going to focus on here, though, is how to make sure that you are prepared for this, to make sure you have the direct debits that will meet the requirements. And before we get into some of the places you can look, I want to cover something really important. And this is that most of the time when direct debits are included in that eligibility criteria for a switching deal, it will have the word active before it. Now, what this actually means is debatable. There are different interpretations, possibly by different banks. And sometimes a bank might say it means one thing, but actually when it comes down to it, they're not that fussy. But I like to err on the side of caution, and I like to make sure that when I am switching bank, to take advantage of the switching deals, and if they require a direct debit, that I call an active direct debit, one that has not only appeared on the old account, but also money has come out of it. Now, if you've got plenty of time, you're being proactive, that's not going to be a problem. You can set these direct debits up, either brand new ones or existing ones that you can move over to a separate dummy account if you're using a dummy account for switching, and they'll be there ready to go out. The main thing also you have to remember is that there is enough money going into this account in order to pay those direct debits if it is not your main account. But you can be proactive, you can set those up, and I'll give you some ideas for those in a second if you're struggling to find some. But if you haven't got much time, that could be a bit of an issue. Sometimes these switching deals are only around for a very, very brief period, maybe a month or so. And sometimes these direct debits, if you're starting them up from scratch, can take a while for them to not only appear on the app, but also for that money to come out. Okay, often if they're monthly direct debits, that's often how that works. But again, when we go through those different options, I'll share with you a handful which you can set up, which are pretty fast to set up. But also, I think this is really important, they are not necessarily costing you any money. You're not having to pay for something you don't need just in order to trigger these direct debits, in order to activate those bonuses. So direct debits, where can you get them? Well, you'll have some on your accounts already, right? So if you're doing that and you're switching that main account, nice and easy, they're already there to go over. I would encourage you to make sure they are monthly rather than quarterly or annually when you're factoring these direct debits for an offer. But broadly, that's going to be absolutely fine. However, sometimes we won't want to switch some of these deals, will we? Some of these direct debits. If you have maybe the Santander Edge or Edge Up, or now closed to new customers, but the 123 or 123 Lite current accounts from Santander, which give cash back on your bills, you'll need the majority of your direct debits there set up in order to get that cash back. So you're not going to want to move them to somewhere else in order to get the switching deal. You want to keep them as they are. And you might even find some of these direct debits that you've already got, these existing direct debits you've got set up, aren't actually direct debits. Sometimes there's something known as a continuous payment authority. And this is not a direct debit, and it will not count towards a bonus. This is basically, these CPAs are when you have paid using the long number on your debit card or even your credit card, even more not a direct debit. But these long numbers, the money comes out every single month. It feels like a direct debit, but it is not. So you might find that you've got some of these in the mix as well. So you need to check that those ones are direct debits or not. And that might be a bit of an issue. Broadly speaking, obviously you've got your energy bills, your council tax, your mobile phone bill, your water bill, pay TV like Sky and so on, broadband. Those, most of the time, they are going to be direct debits that you can use, and they always say tied up in those cashback accounts. TV license, some insurance, although often that's annual. Vehicle tax potentially, although again, monthly vehicle tax, you often get charged extra to do that, so they're best not to do those. You've got a mix of ones there. Just check that they aren't CPAs, they are direct debits. Again, if you can't use those or they've already used up elsewhere, there's one you can set up if you have a credit card. You can set up a direct debit to clear your credit card in full every single month, which is good practice anyway. It's a good thing to be doing simply because that is going to help you avoid getting charged interest. Means you won't forget to pay off that card each month, and that is cleared. So that's a great thing to have. Now, you can hack this slightly. If you aren't spending your credit cards very often, you can sometimes use them to pay for a service that requires those continuous payment authorities that I mentioned before. So Spotify, Netflix, maybe a gym membership, any of these things that come out every single month. If you pay for them with your credit card and have a direct debit to pay off the credit card every month, it's another extra direct debit you can have. So that's a nice one. Normal spending you're doing, it's nothing extra to set up, but it helps you ensure that money comes through. Obviously, if you don't have one of those regular payments, you just need to make sure you're spending on that credit card every month, even if it's buying yourself a pack of crisps and a bottle of Coke or whatever it is, the corner shop once a month, that direct debit will still come through. You can do this similarly with some buy now, pay later services. Just be really careful there that you are not doing a CPA to pay off your buy now, pay later, that it is a direct debit that's paying it off, and obviously be careful of all the things that come with buy now, pay later anyway. And you can also do similarly with PayPal. So for example, I actually pay for my Spotify account via PayPal, and then I have a direct debit that comes out of Spotify every single month. Out of PayPal every single month, and that counts towards my various direct debits in my current accounts. They're kind of the everyday spending. If none of them are working, you've used them all up, then maybe you can look at charity direct debits. You may already give to charity. Depends how you do this. If you do it via payroll giving via your workplace, you could cancel those and instead do it as direct debits from your accounts. What I would encourage you to do here, though, is don't set them up just for £1 for 1 month and then cancel them just for the sake of getting your free money. Because these direct debits will cost the charities when they are set up. And if it's for a small amount of money for a short amount of time, it really isn't helping them in any way. If anything, it's the bureaucracy, it's probably going to cost them. Okay? So if you can donate and you wish to donate, make this a regular donation via direct debit that you do month after month after month. And once you've switched over, you're not going to cancel it. You'll keep it going for as long as you can afford. Again, as I mentioned before, just be careful that there is money going into that account to clear that direct debit each time. But that is a really, really good thing to consider afterwards. There are also some you can set up. Again, if these aren't quite working for you for whatever reason, there are some savings accounts that you can have which allow payments in via direct debit. Again, not a huge number of these, but again, that is you sending your money over to the separate savings account, which means you can access it and bring it back to you. So it's not costing you anything. You aren't buying anything just for the sake of it. And these often can be quite fast. I said to you about some quick ones that you can set up. These are generally the ones that I set up for switching deals. One is Moneybox, and the other one is Plum. Now, they can sometimes be a bit funny during the switch. I do keep an eye on them, but they've generally always worked for me and paid through. But I hear sometimes people are a bit worried about them not being activated. You might need to go into them afterwards and just reconnect the new current account to the app, particularly with Plum afterwards, but it will switch over. It will be appearing in the old account and the new account before and after that process. And that money, you can just take it out whenever you want. With Moneybox, it's only one withdrawal a month. But again, as long as you do that, it's a minimum of £2 every week, £10, £12 once a month, take it out back to your account. No problem at all. There are also investing platforms that will also work in the same way. Bear in mind, some of these might have quite a high initial direct debit, that first deposit. If you're opening up an investment account for the first time, it could be quite expensive, so not practical from that point of view. And obviously with investing, if the money goes in there, there's a chance that it could lose some of its value. It might increase some of its value, but it might lose some of its value. So again, these are, if you already have some of these platforms, such as Vanguard, we mentioned Moneybox already, AJ Bell, eVesta, some of those places, if you already have them, you already put some money in, we'll just set that direct debit up as part of that switch for you in order to trigger that bonus. And finally, and these are a couple that you can look at, which again, don't think these are necessarily worth doing because they are generally taking out additional services for the sake of it. But you might feel if none of the other ones work for you for whatever reason, and you would, for the sake of paying £2 or £5 or whatever it is, in order to get £175 or £200 for a bank switch, you might think they're worth it. These could be worth adding on. So a couple here. The Guardian, you can donate £2 a month to support them. You might support their journalism anyway, and so you'd see it as a kind of charitable thing as well. It's not too bad. The National Lottery is from £1 a game, so monthly that would be £4 a month. These aren't necessarily quick ones to set up. It could take 4 weeks to set that one up. But again, if you're being proactive, there's a chance that you'll win something off the back of it. So it's not the end of the world. You can do something similarly, with other kind of lotteries, the health lottery, postcode lottery, but they're going to be much more expensive. So I wouldn't encourage you to do these, but you may be doing it anyway. So things to consider. There's also a service called Little Direct Debits. These services do come and go. They sometimes get shut down, so make sure you keep an eye on them to ensure that they are active when you want to use them. And there where you can set up a weekly direct debit for £1, and that will go to the people who are running those sites. They have their own costs like hosting and technical things I'm sure they need to cover and fees, but they will be making some money from this. And I kind of think I've given you so many other options. You don't need to go down that route. You can use one of the others way before that, but they are a backup if you do need something quick and short term. Right, I'll be back in a moment with this week's Deals of the Week. So normally in this part of the podcast, I will take you through my Deals of the Week. I am going to do that in a second. There are a few that I want to share with you, but because this is Black Friday week, there are going to be so many additional deals that come and go at a really, really fast pace as we run up throughout this week, but particularly on Friday, maybe even on Cyber Monday in a week's time. So what I want to do is encourage you to keep an eye on becleverwithyourcash.com/deals, and also on our Instagram and social media accounts such as Twitter. So Instagram is at becleverwithyourcash. On Twitter it's at beclevercash. Anything really, really, really good as well, which might go quite fast, we'll be sharing them on those accounts. So do keep an eye on those. What I will reiterate as well, though, as I said last week when sort of preparing for Black Friday, is to only buy the stuff that you need to buy that you actually know you're going to use for whatever reason. It's very tempting, very easy to see all these deals and discounts being shared all over the place right now. Don't get swayed just because someone's telling you can get 50 quid off this or £5 off this. Look for something you want. Look for a good price. Listen to last week's episode if you need a bit of help in preparing for that. Some tools that will help you find those best deals. Having said all that, here are some offers that I think are worth checking out. One of them particularly relates to Quidco. Quidco, most years during Black Friday, and looks like it's doing it again this year, will have these extra bonuses, limited opt-in bonuses. So over the weekend, I saw for one day only, there was spend £20 at the likes of HMV or Game or Zavvi, get £10 back. Recording this on the Monday, there was spend 50 quid at Look Fantastic, get 20 quid back. And this is all on top of the cashback rates that are offered by Quidco in addition, and also any discounts and offers, sale prices from those particular retailers. I expect that to be continuing all of this week with many, many more of them on Black Friday itself, but they go really fast and there's a limited number of people who can opt in, and you have to physically go in and opt in to that offer before you can spend on it. So have a look out for those. We might find that other places do similar things. Top Cashback, spoke earlier about the likes of Jam Donut and Cheddar. There's also airtime rewards. I would imagine there's a lot more around. There's Cashback World, there's Cashback apps where there are boosts and bonuses that are certainly worth considering and then stacking them with those other offers. I've certainly, in previous years, that's where I've made the bulk of my savings on things, and on everyday purchases as well, not just random Black Friday sale things. Boots generally, buy some stuff that I need, some paracetamol and some plasters and who knows what, those kind of things. Stock up on them, get them with these extra deals and discounts that are coming through. Okay, so having said all that, a few extra things to share with you. One of them is to have a quick look at your Nectar app. If you have a Nectar card, log into the app. And not all of you have this. In fact, most of you will not have this. But if you do, it's a really good offer. And this is kind of like the Nectar Double Up promotion, which used to run in years gone by. It finished in 2021. They are now trialing Nectar and Sainsbury's, the Nectar Points Power Up. And you can double up your points up to a maximum of £50 worth of points, effectively an extra free 50 quid to spend in Sainsbury's. And unlike the Double Up offer, you are not restricted on which departments within a Sainsbury's store you can use it. So you could use it on your normal grocery shoppings. I have written a whole article on Be Clever Your Cash explaining how this works if you're eligible. Sadly, most of us aren't. None of us in the team saw the offer. But again, it's definitely worth looking at if you can get it. What else to tell you about? There is a new app called Mixer. This is from Stonegate Pub. So they run a lot of the big chains as well as some independents. And this new app, if you sign up via a referral code, so again, ask around, see if any mates got one already, sign up with a referral code and connect your bank account to it, you will be able to get a free drink and a £5 voucher to spend in one of their pubs. So that's a pretty decent one to help you with a night out. And again, if you refer your friends, you'll also be able to get a free drink on your account as well. So you might be able to stack up a few free drinks with that one, which is pretty good. If you're an American Express card holder, have a look. I don't think many of these will be left by now, but I want to share it with you just in case. Have a look. They were some £5 off £15 spends at eBay until the end of the year. So again, have a look, see if you can add that one on. And finally, if you do fancy going to see a West End show, the London Theatre sale is available now to MasterCard holders, but to everyone else from Thursday. So you can get some really, really, really decent discounts on some big shows. As I said, for all the big Black Friday offers that will come up this week, becleverwithyourcash.com/deals. My name is Andy Webb. Thank you so much for listening. Until next time, cheers.